Good morning, all. In today's lecture, we are going to see what is minimum finance. Now, as we all are aware, people keep on asking about how you have got this bike financed, how you have got this machinery financed, or how you have got your flat financed. Because people know that as far as income is concerned, you don't have that much amount of an income which is sufficient enough to buy something like this. So people may be curious to know about from where you have got funding or finance for the thing that you have purchased. So in that sense, you can always understand as and when you need money, that money from where you're getting it, that is what finance refer to. So basically, finance is concerned with getting the funds and then making use of these funds into business, into your personal life. So to start with, it's a branch of economics and it is basically relating with art and science of managing money. It is called a science since there are different methods, techniques which we make use of for making decisions. And it is called as an art because the quality of the decision depends on the personal abilities, personal knowledge, experience, and the practice in handling financial functions. So basically, finance is nothing but as and when you need money, that money is made available. Investment, when we refer to the funds invested into the business for getting more returns. Basically, when we talk about finance, we are talking about making arrangement of money and then making use of this money. Finance helps us in making the optimum use of the financial resources that we have. Finance is linked with so many other subject areas. So it is linked with accounting for sure, marketing, production. So all the different departments, because each and every department for getting funds, getting finance is dependent on finance department. So finance and marketing is related because for creating awareness, you're going to require funds. Finance and economics is related since we have seen it's a branch of economics. Finance and accounting is related because how is the company's financial performance? That will determine how much is going to be the requirement of funds for the company. So finance is relating with production because for all the different production activities, you're going to require funds. Finance is linked with information technology. So in so many other ways, information technology is going to help you determine the funds requirement more accurately. So finance and the psychology is related because as we have already discussed, it is the personal abilities of the person who manages finance, okay, is going to determine the quality of the decisions. So finance and statistics and mathematics is related because we are going to make use of various methods, techniques for making financial decisions. The outcome, the calculation part, the analysis part is going to help you. So finance is relating with law since we have to follow regulatory procedures. Finance and tax is also related since as and when we are going to get the funds or as and when we are going to make use of the funds, we are going to see to it, we are selecting the options where your tax will be saved and you will be able to generate extra earnings for the firm. So we are going to see the objectives of financial management first. Now, understand, though we say always that profit maximization is the main objective of any of the firm, do understand financial management is always concerned with the benefit of shareholders. And there are certain reasons why financial management mainly focuses on maximization of wealth of shareholders than maximization of profit. So we're going to see the reasons behind. As this profit maximization ignores social benefits sometimes, you may engage yourself into some activities which are not, or the products which are not good for society. Sometimes it may happen that we always say more risk, more return. So it may happen that to get more and more return, you may be, or to get more and more profit, you may be engaging into some risky business activities. And This profit maximization objective doesn't cover the real value of the money, which changes with the passing of time. So it doesn't pay much attention to the time value of the money, and that's the reason why profit maximization is not considered as the main objective of financial management. So when it comes to financial management, maximization of earning per share, maximization of return for the shareholders, mainly concerned with maximization of wealth of shareholders. Now, when we say about wealth of shareholders, what shareholders have as a wealth is shares. So we will be taking such decisions which are going to result into share price increase, or we are going to ignore the decisions which may impact the share price changes into the market. So wealth maximization is considered as the main objective of financial management. Apart from this, there are two things which you need to minimize when you are maximizing wealth for the shareholders. One thing that you have to minimize is the cost of the funds or cost of loan and other resources. And you need to minimize risk also. Basically, when we talk about objectives of financial management, the main or the primary objective of financial management is maximization of wealth of shareholders, that is maximization of return on equity, and then maximization of profit. Lastly, when you are trying to ensure you are maximizing earnings for the shareholders, you are trying to ensure that the cost and the risk is minimized or mitigated. So this is all about objectives of financial management. I will basically see what is meant by financial management. So it is mainly concerned with whatever funds you raise, making the best use of those funds. Then it includes acquiring the funds and then making use of these funds into the business. This is basically concerned with planning, raising, controlling, and putting these funds into the best option possible. So basically, if you'll try and have a look at what finance covers, so ये जो main two decisions है, getting the funds and making use of the funds. Before you raise the funds, you need to know how much funds you're going to require. And for that reason, first of all, you need to do estimation of requirement of funds. Then you need to look for the sources available to the company. Then you need to think of the present capital structure, means whatever amount of capital companies already have invested into the business, you need to see how that is made up of. You need to check how much is the owned sources, how much is the borrowed sources. So here we are referring to the capital structure. So how your capital is composed of. So if already you have so much of a borrowed funds or loan funds, then you cannot raise more loan funds. Otherwise, it will result into additional risk for the shareholders. So as and when you are trying to select the funds from where you want to get the funds, you need to first refer to the present capital structure that the company has. Then once you finalize the sources, you're going to carry out the procedure and you're going to get the funds. Now, once you get the funds, you need to think of making use of these funds into business. So understand, whenever we refer to the capital investment, this investment can be done in two forms. Number one, if you are investing it for buying fixed assets or some property, land, plant, machinery, that is referred to as the fixed capital investment, which is long-term investment, which is basically covered into capital budgeting decisions, means where you're going to invest large amount of funds. And the other type of a requirement which you're going to have on daily basis, that is to finance your daily operations of the firms, that is to finance your current assets, that is called as working capital decisions. So basically, as and when we talk about making use of the funds, we use these funds for two reasons. Number one, we use it in short term for doing working capital investment. And when we talk about making use of these funds for long term, so we are referring to the investment that we are going to do into the fixed capital, that is into the fixed assets. So your working capital investment basically talks about making investment on a daily basis for financing your current assets. So as and when we talk about making utilization of these funds, we are especially referring to making use of some funds for fixed capital and making some use of some funds for working capital. Then whatever cash or the surplus you may be having at different point of a time, making the best use of that cash means ensuring that you won't have shortfall, and again ensuring if you have any surplus that is being invested properly. So basically, when we refer to the finance, making the best use of the funds which you have, okay, is the main aim of financial management. We are also going to ensure financial control. You will be using the funds for whatever reason you have raised the funds. You're going to use that funds for the same reason. Means if you want to buy a machine and you have got the funds for buying a machine, so you'll ensure that the money which you have got for buying a machine is used only for buying the machine and not for any other reason. That is referred to as the financial control. And then also making dividend decisions, okay, whether to distribute the profit in the form of dividend to the shareholders or not, making decisions which are going to impact company's liquidity position, means day-to-day cash management to ensure a company won't be having shortfall of cash for making any payments. So this is all about financial management. So in the next session, we'll see Indian financial system in detail. Thank you.